Taxes.
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 Taxation.
Taxation.
Well, hold on, Becky, hold on.
Tax refund.
Yeah, so it's that time of the year again where we're all talking about taxes. Now, for most people, taxes are probably a love-hate relationship. Some people love tax time because it's that time of the year where they're getting a nice refund from the government. But the general consensus that we are used to having is that taxes are bad. And there's definitely a reason for that. The simple fact that the rich can pay less tax than the rest of us often leaves a sour taste in everyone's mouth. Take for example Warren Buffett, who, believe it or not, is on a lower tax bracket than his secretary. So the question that we all probably have is, well, how can we bring our own taxable income down such that we're more like our good old friend Warren Buffett here? Now, if you only have one job or one income source, then the yearly salary that you receive from your employer is your full taxable income. And if you left it at that, then you'd pay taxes on everything that you made. Now, in Australia, we have what is called a progressive tax system with marginal tax rates. What this means is that if you made $18,200 in a year, then your tax rate would be 0% and you'd effectively pay $0 in taxes. And if you made $45,000 a year, then you'd be taxed at 19%, but not on the full amount. So if you made $40,000 a year, the first $18,200 that you make are taxed at 0%. And then for every dollar above that, you're then taxed at 19%. And the tax brackets will continue to go up the more money that you make. So yes, if you make more money, you pay more tax, but you still overall make more money. So we all pay taxes on our income, but the government has a list of tax deductions and tax credits that you can use to reduce your taxable income. And the reason that they do this is to subtly encourage people to do certain things. For example, there's the ability to negatively gear and claim tax deductions, which encourages people to invest into property. Or there's charitable tax credits to get people to donate their money. Now, whilst these things can also benefit you and I, they also tend to be the things that the really rich people and large corporations tend to take advantage of. There are so many examples of billionaires like Jeff Bezos, Elon Musk, and Warren Buffett who are all paying lower taxes than their employees. But you also have to understand that these people also have the time and resources to pay people to find all of these tax loopholes for them. Data from the ATO actually showed that there were 66 millionaires in 2021 that paid $0 in taxes. However, those people paid on average $219,000 to have people manage their tax affairs for them. Now, whilst the majority of us don't have the resources to hire these fancy tax accountants, we still can apply some of the methods that they use in our own circumstances. Now, to understand more as to how these people pay $0 in taxes, we have to understand that not all income is taxed the same. Now, if we go back to the example of Warren Buffett and his secretary earns an income and pays income taxes, which in the United States follows a similar progressive tax system like Australia. But Warren Buffett earns his income from the stocks that he owns in Berkshire Hathaway, and he pays capital gains tax, which is taxed at a significantly lower rate than income tax in the United States. And this is essentially the first method that the rich use to pay less taxes. Now, in Australia, any capital gains that you've made from selling an asset is still taxed at your own marginal tax rate. But we also have what is called a capital gains discount, which essentially gives you a 50% discount as long as you've held the asset for more than 12 months. So for example, if I sold a whole bunch of shares and made $200,000 in profit, I would only have to pay taxes on $100,000 due to the capital gains discount. So in total, I'd pay just under $25,000 in taxes, making my effective tax rate 12.4% versus someone who earned an income of $200,000. They'd have to pay taxes on the full $200,000, meaning they would pay just under $65,000 in taxes, making their effective tax rate 32.3%. This is one of the main methods as to how the rich can stay rich because they have a lot of their wealth tied up in the stock market. I could have made $1 million this year in the stock market, but that doesn't mean I have to pay any taxes on it because our system is based on only paying taxes when we sell our assets. Some of these ultra rich people are even able to get loans from the banks against the stock that they own and essentially just live off of that, meaning that they don't even need to sell their stocks in order to turn it into spending money. And no sales means you guessed it, no taxes. And most of the time, the interest rate on these loans are less than taxes. So even though they're paying back debt, they're still better off than selling their stock and having to pay taxes on it. Now, this obviously isn't something that the majority of us can leverage. However, the last method is, and it's something that is synonymous with Australia, especially if you live in Melbourne and Sydney, and that's to leverage a thing called negative gearing. Now, negative gearing was a tax law introduced all the way back in 1985 by a gentleman called Paul Keating, which essentially allowed investors to deduct any rental property losses from their taxable income. So for example, if I bought an investment property for $500,000 and I made $24,000 a year in rental income, but my expenses such as interest and depreciation on the property ended up costing me $50,000, I've essentially made a loss of $26,000 per year. Now, what negative gearing allows you to do is to take those losses and deduct it from your taxable income. So if I made $100,000 a year, my taxable income would now instead be $74,000 a year, resulting in a tax saving of just under $9,000. Now, don't forget as well that the capital gains discount also applies to property so long as you hold the property for greater than 12 months. So now you essentially have two tax laws that greatly benefit investors who invest their money into property. Now, the irony of the matter is that when negative gearing was first introduced, the goal of the law was to increase the supply of rental properties by making real estate more attractive than other types of investments and to make housing more affordable. And yeah, we all know how that turned out 40 years later.
This housing crisis.
Housing crisis.
No stopping the growing rental prices.
Our rental market has gone from bad to worse, with prices continuing to soar.
Now, ever since it was introduced, negative gearing is something that the rich have been using to their advantage. In 2022, the government paid out $8.5 billion worth of tax concessions related to negative gearing and capital gains discounts. And within the next decade, it's estimated that tax concessions for property investors will reach north of $20 billion annually. And it's been found that most of the benefit from negative gearing actually goes towards high-income households. And it makes sense because they're the ones with the resources to buy up all the property. According to research done by the Australian Institute back in 2018, about 50% of the benefits from negative gearing goes to the top 20% of households, whilst only 6% goes to the bottom 20%. Now, whilst I think that the majority of people like you and I can never end up in a scenario where we're like the ultra rich and paying $0 in taxes, we can still apply some of the methods that those people use into our own circumstances so that we can pay less taxes in the future. So for example, by buying assets like stocks or real estate, just as an example. And also by paying yourself out in ways that are taxed lower. So if you enjoyed the video, make sure to hit that like button, share it with a friend, and also subscribe to the channel for more content like this. Now, if you want to learn another method where you could use to reduce your taxable income, make sure to check out this video right here where I talk about salary sacrificing.